All right, I think we've got a good crew that's logged in already. Howdy, everyone. I'm extremely thankful to be hosting PowerGEM's first ever DAYZER webinar titled The PJM Edge, Turning Market Volatility into Trading Advantage. I'm Taylor Ham, the sales director at PowerGEM. Before this role, I was at ICE working directly with power traders, which means I know exactly how fast PJM can move and how little time you guys have in a day. So I just want to take a moment and thank everyone for carving out a few minutes for this discussion. Today, we're going to be talking about the big question traders keep bringing up, and that's how do you stay ahead of congestion and price swings when the old signals are breaking? So PJM is changing fast, as we know, load growth, queue issues, new constraints, even gas power dynamics reshaping the stack. With that said, we're really excited to have two great speakers with us this afternoon. I want to first thank Blake Schaufele from Trafigura for joining us this afternoon. Blake has used DAYZER extensively at both Mercuria and BP in the past, and now in his current role at Trafigura. Blake will help lead a conversation on the realities of trading PJM today, navigating congestion uncertainty, evaluating FTR paths, and making decisions when historical correlations no longer hold. He'll also share how forward simulation helps traders move beyond intuition and rely on disciplined, data-driven approach that improves accuracy and confidence. We're also joined by our own Thomas Connor, our Director of Transmission Modeling at PowerGEM. As a former trader, Thomas works closely with PJM market participants every day, helping them use scenario-based simulation to understand congestion drivers, run sensitivities, and support FTR virtual and real-time strategies. Thomas brings over 18 years of experience in the field, but I'm going to let him share a little bit more about his experience in this space here shortly. From what we can expect today in our 1 hour webinar, we're going to go through some challenges faced in PJM trading, the importance of simulation-based tools such as DAYZER, specific use cases, successful outcomes, and applications beyond PJM. That's going to be about a 45-minute presentation. That's more of a conversation between Blake and Thomas today. We're going to have some audience poll questions throughout our discussion to keep it interactive, followed by about a 10-15-minute audience Q&A. But first, let's hear from our audience. Thank you again, everyone, for joining this afternoon. Our first poll question is going to be right out of the gates, and we want to ask, what is the biggest challenge you've faced today in PJM trading? And if you guys could take a moment to answer that, we're going to give you guys about 30 seconds to answer our first poll question of the day, and then we'll get rocking and rolling on the discussion between Thomas and Blake. Awesome. All right. Well, thank you all for taking the time to participate in our poll. It looks like congestion volatility, interesting, is going to lead the pack on some of the biggest challenges you guys are facing in PJM trading today, as well as lack of transparency and forecast accuracy coming in second, tie for second at 21%. So thank you again for everyone participating and being here this afternoon. I'm going to pass the mic over to Thomas Connor, our Director of Transmission Modeling at PowerGEM, to begin the discussion with him and Blake.
Awesome. Thanks for that great intro, Taylor. Yeah, good news about that poll. We'll be going over pretty much all of those aspects today in our conversation here with Blake. So yeah, thanks for the great introduction. I am Thomas Connor, the Director of Transmission Modeling here at PowerGEM. I've spent my career really working at the intersection of power systems engineering and market analytics. really my entire career has been focused on transmission. And here recently I've been focusing on transmission constraints, operational behavior, and how system changes all can affect and shape market outcomes. Before joining PowerGEM, I worked across operations planning and modeling roles, again, all surrounding transmission in both regulated utilities as well as deregulated market environments. I've led steady state and production cost reliability studies, as well as a whole host of hedging and optimization roles, as well as siting and acquisitions, and even speculative trading efforts in markets for organizations operating in really most markets, PJM, MISO, CAISO, SPP, and ERCOT here the most recently. Over the past 18 years, I've helped developers, utilities, and traders evaluate grid constraints, understand LMP formation, and really quantify the impacts. What is it that's shaping what we see in the markets when it comes to new generation coming online, new transmission projects coming online, the outages that can be associated with those projects, and most recently, of course, the big buzzword load growth, primarily around data centers. In my role at PowerGEM, I lead the development and application of our modeling tools for the DAYZER platform to help market participants run forward-looking simulations, diagnose congestion drivers, and build strong data-driven strategies around trading, hedging, and even project development in the long term. I'm excited to walk through some of the insights we've seen in PJM and really dig into how traders are using this scenario-based fundamental modeling as a very important tool in their toolkit to get ahead of the rapidly changing future and the increased volatility that we are seeing across all the markets and as well in PJM. So specifically with that, what are some of the challenges that traders are facing right now in PJM that are making their forecasting the future harder than ever? As we saw just in our poll, basis risk, congestion volatility increasing with this increased load growth, the large data centers in the Dominion area, as well as the continuing challenge of queue delays. Congestion volatility, again, being driven by outages, being driven by new construction in both generation and transmission. Price formation becoming increasingly nonlinear as your penetration of renewables increases. And again, these outages can produce very large swings in the pricing behavior around your nodes. And then with all this constant change being the theme, historical correlations are breaking down. So where maybe you could base, one season strategy on what we saw the previous year, that's becoming increasingly difficult as one season is completely new from the past. So with that, we're very thankful to have a great trader here with us. Blake, as Taylor introed, has a lot of history with DAYZER and also in the markets. So we're really grateful to have him here sharing his perspective. And with that, I'll turn it over to Blake.
Thank you, Thomas. I appreciate it. It's good to be with you guys. Once again, my name is Blake Schaufele. I work at Trafigura, and I trade mostly the Midwest and the Mid-Atlantic, PJM area. But really, you kind of have to wear a lot of hats. So we look at a lot of different things, and I look at a lot of different things here. My background is I have an accounting degree, and I have not used it in a long time, and I don't intend to use it anytime soon. I walked into a one-year rotation at BP on January 23rd, 2006. That was my 1 year of power, and we're coming up on 20 years now here in a couple weeks. So I never moved on. I stuck with it. Spent the bulk of my career really across all sorts of different roles within the power space, and really mostly in ERCOT. My Eastern focus is really more in the last 4 or 5 years. How far back do I go? Well, I remember a zonal market in ERCOT. I remember having to pass out zones for seller's choice, and I don't think anyone on this phone call probably remembers that or should. Here recently, I've been more, I guess the bulk of my, I've done real time and things of that nature, but the bulk of my time has been in analytics. And I'm kind of a late mover into trading. It's something that I've done over the last couple of years, but the bulk of my career has been looking at the markets, and I don't want to sound like a big nerd, but it's something I really enjoy. I find it ironic that I am on a webinar talking about power flow modeling in DAYZER, because for a good chunk of my career, I was really against it. I was not a big fan. I felt like it was, that they'll saying garbage in, garbage out. And, that is true. But in one of my roles down the line, I got introduced into DAYZER, and actually using it changed my perspective and understanding how to use it. No longer being the guy that runs at one time and said, well, that's the number. Learning how to look at it more of a scenario, find sensitivities, find breakdowns in relationships, and really just using it to answer your curious questions and sit down and come up with ideas, and then test it out, see what the physics show. And also knowing what it can answer or what you need to help it answer, because there are things that models don't see that you see. And so you've got to build that into the model for it. But it's really been an interesting and exciting journey. And I think as I look out over the next 5 years, it's truly amazing to see the opportunities that are out there and the changes that we are seeing. I remember at a time when I first started, power was not really, it was post Enron blowing up, and power never really got there. It was the commodity that didn't make it. You still traded it, but back in the mid 90s, it was thought to be the biggest commodity that would be traded because everyone was exposed to it. And then it didn't happen. And well, here we are. Now it's happening. And you've got tech companies coming in. Everyone's looking at power because this is truly something that makes a really big difference on people's bottom line. And all that to say is, yeah, while the future isn't written, it's going to be interesting. And I think you need any tool at your disposal you can get, because you can't look back. You've got to look forward to figure out what's going on. And that's scary, but that's very exciting. So.
Awesome. Thanks so much, Blake. So yeah, really excited to dig more into your perspectives, because I think, just as you said, coming from a background where maybe you looked more at historicals, maybe more algorithmic, and now coming to appreciate more, how to use a simulation-based tool. I got a question right off the bat for you. So can you dig a little bit more into the importance of simulation-based modeling, like you experienced with DAYZER, and how that has actually actively affected your trading strategy?
Yeah, certainly. I think, the first thing to think is you don't run one simulation, right? This is an iterative process. You want to keep adjusting things and testing things out to figure out exactly where the sensitive parts are. And you can't do that if you just do it once. I think most people that are dissatisfied with this are typically the people that ran it the one time and said, hey, it said April was going to be $35 at West Hub, and West Hub was 45. Why? Well, let's think about all the things that can change and all the different inputs you have here and all the different things you've got to put into those inputs. And what forecast did you use? What changed from the day you looked at it? Well, what did weather turn out to be? What did wind turn out to be? What lines were out that were not scheduled to be out? So you really have to basically work through it to where you find a range. And when you have these range of prices across all sorts of different sensitivities, then you start looking at, all right, where's the market trading within that range? Is it toward the upper bound, toward the lower bound, more toward the middle? And you got to figure out where your risk is if you buy at that market price, where you are in the range. Like if the market's trading toward the upper bound of your range, you don't want to buy it. I mean, you could. I mean, maybe you want to roll the dice. Maybe you feel your simulations were too tight and they could go even higher. But the way I look at it is I'm looking to figure out where I am and where the most opportunity I have for this to move in the right direction for me. When I think about, the issues that are out there right now is, looking back is hard to do because you have so much changing. Traditionally, if you said, hey, what's load growth? I could just turn around and say, well, it's about 0.5 to 1%. And I would be pretty close. And generally, the way the load growth was distributed out was more uniform. Now it's very chunky, and it's comes in waves, and it comes in specific locations. And so looking backward is not going to really help you in this situation. I really like DAYZER in the sense that I can sit down and start working through scenarios. I am not a physicist. I married one, and she has not taught me anything. So I really have to put all my trust into the guy that helped design the PJM dispatch model himself, and Asif, and use this stuff. Now, am I going to nail the price? I'm probably not going to nail anything, right? But that's not the goal. This isn't a crystal ball. It really is an arrow in your quiver. It's another tool that you can use to help navigate through all this volatility. I think, congestion is the hardest thing to pin down. There's a reason that poll came back that way, because that's where the big changes happen. If you look at PJM from a supply-demand balance perspective, it doesn't look all that tight. I mean, but it has to do with where the demand is going to be showing up and where the supply is, and the fact that PJM kind of sits in the middle of other ISOs that need it. And so you have MISO. MISO is very tight and could get even tighter, right? And so it's about, trying to answer all these little questions, and you're not going to answer it in one simulation. And you're not going to answer it in probably 50 simulations, right? You've really got the opportunity to run this thing over and over, and you've got to, if you've got the bandwidth and the systems and the data scientist, which I'm very thankful on my end to have that, then you can start testing this out. And now you have that information, and you can start surfing through that information and kind of seeing where you are in the current setup of the market, what changes may be coming. When you get an announcement that a data center is going in, Lone Wolf, Oklahoma, well, you should have run simulations prior to figure out, all right, where's the grid sensitive? And if I throw something down in that area, what does that do versus if I throw it down in, northern Nebraska, to, throw it into those areas. So once again, I think this is a valuable tool, not just for the power side. If you're answering a power question, you're pretty much answering a gas question too. So this has value to your friends on the gas side of the ledger, because if you're running power plants, you're burning gas a lot of times. And if you've got different plants out, different scenarios, if you've got coal that is not running, then gas will be taking its place. And this gives you an additional simulation on that gas side. So that's kind of the way I look at it. I mean, obviously you can test your FTR strategies and things of that nature, which is nice. All of this plays together, right? So if you're running a simulation looking for something that your long-term term trader's looking at, well, that also plays into what your nodal trader's going to be looking at. And so you get some leverage there on one tool. So, but, yeah.
Yeah, absolutely. Thanks for that, Blake. And exactly like you said, our goal with DAYZER is kind of one of our unique offerings is that we do give you a tuned base case, right? As kind of like a starting point for you to do your simulations. And while, as you said, the future is very uncertain and the past is not really indicative of what we're going to see in the future, we do actually strongly support and recommend backcasting, especially when you're newer to DAYZER, so that you can build that familiarity with DAYZER's performance relative to having more perfect data, right? Backwards looking, we're still not 100% perfect data because there's still uncertainty about unit outages and some other things, although you can build that information into DAYZER and run with almost perfect data. But we like people building that foundation because looking into the past, the near past, with DAYZER, you can really dig into what's driving the fundamentals, right? Like you said, really understanding what's driving the market, and then taking that and in the future, as you said, really understanding your inputs, garbage in, garbage out. What is the range that you're simulating in April or March of next year? What's your wind assumptions? What's your load assumptions? And again, exactly as you said, running a host of sensitivities to really paint the target, paint the range that you see the potential of the future. Because if you do believe that you have a solid foundation and that DAYZER is simulating the market, and I appreciate the shout out for Asif there. He was in the group that actually helped stand up PJM. So when we say that DAYZER is a parallel to the simulation of the markets, we do truly mean that, because the man who helped stand up the markets is the one who wrote the DAYZER algorithm of how it does simulate the market. So with that strong foundation of how DAYZER simulates the market, exactly like you said, DAYZER can potentially peg the future, but a lot of times there's going to be a lot of volatility in your inputs, and really modeling that volatility, understanding how that can affect the range of outcomes, and creating a strategy that falls within that range. Right, and understanding again the drivers of what is actually driving that range. That's kind of where the special sauce of DAYZER can really support a robust trading strategy, and being able to do a lot of automation. As you gain sophistication, you gain experience, you can do overnight runs. There's so much scheduling. DAYZER has a full API automation that can plug into workflows and really kind of seamlessly support, like you said, several tools in your trading strategy toolbox. So let's get to another audience poll question. For everyone out there that's on this call that it does actively participate in markets, what are your main analytical tools in that tool set? Is it more fundamental production cost modeling, like what DAYZER represents? Is it more algorithmic or AI? Do you use both, or do you use some other approach? We'll wait a few more moments to get some more responses back. We are getting some great activity on those polls. We have about 130 people on, and we're getting at least a third to half of them responding in those polls. So really appreciate that. All right, so yeah, I'll go ahead and give the results here. So we have 38% with fundamental production cost modeling, followed by 34% of both algorithmic and or AI and production cost modeling, with just 12% being only algorithmic or AI trading, and then 20% other. So a pretty good spread. Personally, I like to see the results about 70% using at least some production cost modeling, which obviously we strongly believe in, and Blake has certainly become a believer in. So let's actually step through some use cases. We kind of have 4 use cases here where each one kind of builds on the last, showing how DAYZER can, again, support a robust trading strategy. And starting off at, again, kind of the high level with use case 1, price forecasting and overall strategy development. So Blake, here's a question for you. Where does modeling with, like, again, a fundamental production cost model give you an edge versus traders that maybe haven't adopted production cost modeling yet and are really relying purely on historicals, be it through algorithmic trading or AI trading?
Yeah, really, if you think about, like, if you're standing right here and you're thinking, I'm doing the FTR auction next month for PJM. You can certainly look back at how historically this thing has been for the month of January, but I really think you want a little bit more than just knowing what historical January has been, because we've seen load growth over the last year. I think if you've looked at anything, you guys would be seeing that as well. And you want to know, well, year on year, what should the difference be? Well, you also have to take into account you have all these different line outages and different things that happen, and so the grid doesn't necessarily act the same way, back to back years. And so this gives you an opportunity to sit down and try a bunch of different ideas. Like I think maybe Dominion load growth was X, and I want to increase that in the model. Or maybe I think people are not, they're actually undershooting it. Maybe it's even more. So let's start stressing that area out. And I'm using that just as an example. I mean, there's not, that's the hot place right now because that's what people hear about. But there's a lot of other hot places to look at. But let's start stressing it out and see what that can really do. Because maybe it's overbaked in and maybe it's a sell. Okay, if I do sell and I am off a little bit on my fundamentals and this thing is worse, how bad could I lose money here? Maybe it's just what I like to call a don't trade, right? It's high and I don't want to buy it because it's high, but it could really rip my face off if I sell it. So let's just watch this a little bit more. But having the ability to run the simulations allows you to try to, create that range of, potential outcomes. I don't think of this as a risk reducing tool. I think of this as a risk revealing tool. So let's try to figure out what kind of risk we can take at any given moment, or would be taking at any given moment. With all these changes, you have constraints popping up in different places. If you looked at the real-time trading earlier this week, you had big constraints hitting around Western Pennsylvania that caused a very big price dislocation between 80 hub and West hub. The ability to go in there and say, is this something that's going to persist, or is this a one-off? That's a pretty valuable question to have an answer to. And you're not going to get that looking at historicals. I think with all that, like I said, it's a big tool in your toolbox right now, and it's something that I don't really, given all the changes and the changes that have happened and the changes that will happen, I don't really know how you get around not having something or some way to simulate it. You can't just run scatter plots anymore. Not saying you should stop running scatter plots. I'm still a huge fan, but having the ability to project is a big deal. So.
Mm-hmm. Yeah, thanks for that, Blake. And I think one thing too to think about when you're using a production cost model tool like DAYZER, especially with a lot of the features that we have in DAYZER, is that it's not just looking at the future in like some arbitrary isolation as well, right? We actually have the ability in DAYZER to paint in like days from the past. So it is really melding some of the insights from the future, exactly like you're pointing out. What are the transmission outages, coming in the next few months? How has the transmission system changed in the next few months? What large data centers do we see interconnecting, in the next few months in the year? But with that, we have the ability to simulate, again, as you were saying, a lot of different sensitivities, a lot of variations when it comes to our load assumptions, what sort of weather we see coming in the future month. Like for instance, if we felt, February was going to be a really cold February, we have the ability to simulate February 2026 using the weather profile from, let's say, 2021, right? A very particularly frigid February and memorable one indeed. And again, just like you said, that can help bound your risk, right? Because if you get extremely cold, you have potential from gas shortages, power shortages. You can see why that might be really a tail risk. DAYZER still gives the ability to kind of push the envelope and, as you said, reveal the risk, not necessarily limit the risk, but just as you said, really paint the risk, show the range of possibilities when you take those past assumptions, maybe like days of the past, but then use the real fundamentals of the future, not having to just guess what the future is going to be, but really see the way that transmission load combined with some past weather assumptions can help paint the picture. Um, Oh, and I also wanted to remind our users that they can submit Q&As for the end of this, which we'll address at the end. So just go ahead, and I assume there's some interface to provide that. I can't see it because I'm the presenter, but please feel free to submit some questions. So continuing to dig in, the next layer, Blake, use case number 2 is the detailed congestion and basis risk analysis. So kind of as I said, one of the big advantages of DAYZER while running all these sensitivities is that you really get to quickly dig into the drivers, right? DAYZER will show you not just the price formation, but what is driving that price formation. So can you provide an example of when DAYZER kind of gave that insight that changed your approach to a congested path?
Yeah, and oddly enough, it was back when I was still on the analytics side, and it was an ERCOT problem. Basically, there was a period of time, I don't know, it's been a couple years, but where the West Hub was actually pricing over North Hub for a period of time in real time, and the base case DAYZER model was not actually picking that up, and my ERCOT trader was actually very disappointed and looks at me, and I'm like, I don't know. And that's where it led to a phone call. And that was my first conversation with Thomas. And it was about, hey, look, this is happening. We're not catching this in the base case model, and our forecast changes. I can't make it pick it up. What can we do? Is there anything we can do, or is this just a hole in DAYZER that just happened? And Thomas thought for a second. He's like, well, I think maybe one of the issues you could be seeing is that we have a new virtual load or a new Bitcoin miner of some sort that is probably not visible to the market or visible to us in what we've built out. So we can model in a virtual load there. And we're also seeing that this Falcon Seaboard plant, which is next to it, should be, from a production cost view, running all out, but it's not. So there must be something in the economics that is beyond the production cost view that we have. So maybe what if we went in there and we derated it for 50% or so and put in this new Bitcoin load, virtual load, if you will, and see what happens. And bam, there you go. You started to see it. And now, did that relationship hold forever? No, but in the moment that we needed it, it finally, shed some light on the issue, and we were able to navigate the position in a much, more sophisticated way. But yeah, that was something I really appreciated.
Yeah, thanks for that, Blake. Yeah, that's a great example of how, again, when DAYZER does provide that initial kind of tuned base case, inevitably you will see some mismatches relative to the market, right? Because sometimes the market does not behave in a purely economic sense, right? There can be other factors, everything from, the emission guidelines of units, obviously the outage state of units is always something a bit non-public that everyone tries to dig into. So, given that initial base case, exactly like you said, when you understand, when you see something in the market, you can use DAYZER to capture, well, okay, DAYZER's not getting it right now, but since I have such clarity into the drivers as what it would take for that congestion to show up, right? The market's seeing it. What would I need to change? What reasonable story can I paint where I can iteratively tune the DAYZER model and say, okay, now I am getting the congestion. Now I see what drivers did need to change, and how can that inform, exactly like you utilized, how can that inform my trading strategy in the future? How can I now incorporate that knowledge? I basically validated, information, some information that other market participants might not be able to get, right? Because they're not inherently transparent. They kind of require an iterative, deep look into what is really driving the congestion and how are units in the market responding to it. So awesome, thanks for that. And thanks for changing the slide here. So this is our previous slide was an example of the GIS. It was an ERCOT screenshot. I know this is PJM, but we have a fully featured GIS with LMP heat mapping. It can visualize transmission outages, congestion, basis paths, all overlaid on an accurate transmission system. And we have this for the entire country, all of the markets. Really across all the PowerGEM platforms, but it's also directly integrated into DAYZER. And then the next slide we had there is our quick FTR overview. This is in DZ Node. So DZ Node is our kind of web-based application that comes with the DAYZER platform. We don't bifurcate any part of it. When you have DAYZER, you have access to DAYZER, Transer, and then DZ Node being our kind of long-term, more analytical tool where you can schedule runs, cluster computing, cloud compute your runs, because these runs are very compute heavy. So we do allow you to use a lot of computers both locally or on the cloud to do the simulations. And here it shows where you can create your FTR paths along with the product information like your time of use, ATC, peak weekday, peak weekend, and then immediately drill down into the congestion decomposition of the basis path. Because again, one of the biggest emphases of DAYZER is not just giving you the ability to do the simulations, to do a lot of varying simulations, iterative simulations, but also to very quickly dig into those drivers and really understand what's going on. So now with that segue onto use case number 3, Blake, FTR and also virtual trading support. How do you see leveraging the DAYZER tool set maybe holistically to support a robust DART and FTR trading strategy? And I think you've already talked about this quite a bit, but maybe just tie a bow on it. Where exactly does DAYZER fit into the larger tool set to make sure you're making your trading strategies in a robust way?
Yeah, when I think of it, whether you're talking about just FTR, the product, or a basis position, whatever you may have on, like you're always needing to shock that portfolio and test that portfolio and see where your risk really lies, right? And as I like to think, one of my biggest keys to trading is every day take the action that is in the best interest of getting your portfolio based on your current information and your current view of the forward. And you really can't do that. And, in my mind, you can't do that to its fullest extent without actually running the simulation. So if I have FTR positions and the FTR auction is coming up, I'm running simulations around my existing portfolio just to figure out what sensitivities I have around there right now. Do I need to kick something out, or do I need to add something to it? Do I need to make something bigger? Various things like that. So just always testing it. And if you think about, just the complexity of, the grid as a whole, and then the opportunities you have specifically in the, we'll say the PJM FTR market, where you can trade each individual month for the planning year, every auction. So you're always given a bunch of different levers to optimize in those auctions. And so you're not just running the simulation for the next month, you're running it for the entire planning year and looking around and figuring out, okay, well, maybe I want to kick out May, but I want to hold on to that June piece because we're seeing things pick up because load growth, potentially could be driving stronger congestion in June. So I'll let my May position go. I'll sell that out and I'll try to double up on my June. And so you can test all this stuff out for like that. So you're not just really looking at 1 month or even one region. You're looking at, various, wherever you see things shifting, you want to try to be there before the next guy. And you can start getting, hopefully you can start feeling that shift early through your sensitivity analysis and where you're shocking things. But that's I'm not. I'll full disclosure. I'm not the biggest FTR guy necessarily. For me, it's more of a hedging tool for my basis positions. But I will take speculative FTR positions. But either way, you still need to have some sort of a simulated range of outcomes to understand where you sit in that.
Yeah, absolutely. Thanks, Blake. And I think, just a real simple example. Let's say, there's some pretty significant basis risk, coming in a spring or fall time frame. Largely, those are going to be driven by transmission outages, right? That's when all the TOs are going to try to slam in their transmission outages. So let's say you have this basis path. It is largely affected by a transmission outage, and DAYZER will really quickly paint that picture for you. So the next question is, all right, right now the TO and the ISO is saying this is going to be a week long. But what if it's just 3 days long? What if it's 2 weeks long? God forbid, what if it's the entire month, right? DAYZER can, again, very quickly, with just one change of one parameter, in this case, just the transmission outage duration, you can quickly run, 4 sensitivities around those 4 potential futures for the transmission outage and see how that actually affects the basis, actually affects the FTR value. And then exactly what we're going to segue to here in case number 4 is that's just one variable, right? But one of the awesome things about DAYZER is that you have the flexibility to change everything from a single hour wind output to a single unit, or maybe the single gas price at a single unit, all the way to customizing the entire wind forecast, the entire solar forecast for the entire fleet, all of the gas assumptions for the fleet, the emission costs. DAYZER offers full flexibility for the users to customize all of the inputs. But again, the goal is to give a tuned base case and really enable our users to fine tune it past that. So with that in mind, can you walk us through maybe a scenario where you did weather shocks, did kind of an outage change, or maybe even accelerated a transmission project or even a generation project, and how that might have influenced your trading decision in PJM or another market, and how DAYZER helped you quantify those impacts?
Yeah, I'll it's kind of a real world example. Like I think that most people's thought process would be to do the weather shocks, increase the load one way or the other, zero in on a spot and increase the load, extend the transmission outages. I think one of the key things in my mind when you're using a model of this is you need to understand what the model is doing and what it's not doing. And you need to understand how, it's a simplified version of reality for the reason is we need something that can run in a short period of time. We can't wait for, a month of it to run. But ask yourself, what is it missing and how do I model that in? And the example I would give is you probably go back, I think it's been about 3 years, maybe it was 1 or 2 years after COVID, where you had a lot of supply shocks, right? You couldn't get toilet paper for a while. Well, there was a while that coal plants weren't getting steady coal deliveries. And so you had reduced coal inventories. And if you were thinking in just a purely production cost mode, you would see, oh, well, the dark spread is positive, therefore coal will be running. But coal was not running, even though the dark spread was positive. And when you run a model, that's what the model is going to see is, well, it's in the money, therefore deploy it. But then you have to start thinking, well, that coal producer or that coal plant has other questions to answer. And it's not just running in the moment. So they have to think, well, I can run and I can capture this dark spread here in April, but that would really, really hinder my ability potentially if I don't get deliveries to get that even bigger dark spread in July. So therefore, I'm not going to run. Now, a production cost model would say it's going to run. So you have to have the wherewithal to go in there and say, well, this is what we're seeing. Now let's test sensitivities around what if we derate coal by 50%? Let's make that decision for them. Let's say they're looking at the bigger spread further out the curve than they are looking at the current day. Let's run sensitivities around that and say they persist at this. Say the shortages continue. What does June look like if I'm only running half my coal? And that could be pretty problematic. So let's see and have that view and and that understood as you get further down. Knowing that, have you not touched anything, coal is going to run and June looks pretty benign. Well, the reality is if you go back to June 8th, I think 2022, at the time, it was one of the highest real-time clears in the history of PJM. I think it was the second highest. It was over $400 or $500. And it really was that scenario where you roll into June 8th, you have a forecast miss on the load side by about 8 gig, and coal is still withholding because they want to be able to run in July, and chaos ensues at a time that typically would not be chaotic. And so having the the understanding the market and the ability to simulate things through. Now, I'm not saying you're going to catch that stuff every time, but you can start figuring out what is in the realm of possibility. And a $450 day in June is in the realm of possibility if you're not running coal. Well, now you know that because, well, we've lived through it. But now as we look forward into the future, let's figure out other situations like that. What if we start developing a lot of solar, and all of a sudden we have an area that's super saturated in solar, and that makes it harder for these other things to run. Let's see that. Like, what kind of duck curve can we get? What does that look like in prices? And these are things that are important to kind of shock and ask, because if you're doing a 10-year deal, a lot of things can happen in 10 years, and you want to try to understand as much of it as you can, so you assign the right premium or discount to this deal. And so having this knowledge and the understanding, the ability to simulate it, I think really is a pretty valuable tool.
Awesome.
It's been a
Thanks,
great
Blake.
discussion so far, gentlemen. I just want to take a pause real quick. We have a Q&A tab for everyone on the webinar today at the top of your Teams page, because we are getting up close to the Q&A session here at the end of the webinar. If you could just submit any questions that you have by clicking on the Q&A tab, we'll get to those at the end. And back to Blake and Thomas.
Awesome. Thanks, Taylor. Yeah, really appreciate that insight, Blake. And so it has. I'll take a little break here as well from the conversation before we get to our next poll question. Here at CES and the DAYZER platform, we joined the PowerGEM team a little over a year ago, and it's been awesome. There's a lot of exciting developments in the future. Another member that joined the PowerGEM team was MEA. I think about a half year ago, maybe a little longer now. And MEA really specializes in the gas forecasting arena. And DAYZER obviously uses a lot of gas assumptions, both pricing, but then DAYZER also has the ability to forecast gas usage. Right. So one thing that we're really in the early stages of development is actually creating this kind of full loop gas forecasting, both pricing and then usage between both DAYZER and MEA, or MCAS being their platform. As just one example of a lot of the, I'll touch on a little bit later, a lot of the cool integration opportunities that we have as part of the larger PowerGEM platform. So really looking forward to improving our products all across the board as we start bringing in that expertise from across the company to make our robust platforms even better. So with that, on to audience poll question number 3. Which DAYZER capability that we've gone over here would add the most value to your trading workflow? Would it be increased transparency into price formation, really digging into those congestion driver details, overall FTR strategy support, some of the robustness as Blake went over, being able to actively simulate the progress of your FTR position, testing a wide range of scenarios, or maybe some of the future potential in the integrated power gas modeling that I just touched on. For me, I'm a big transmission nerd, so I'm going to select congestion driver details. I can dig into congestion drivers all day. Just wait a few more moments. But as before, really appreciate all the responses. Getting in, almost 50% of the people in the room is awesome. So yeah, I'll call it there. We have almost 50% of the respondents being scenario testing and outage modeling. So I think a lot of that iterative approach, looking at a host of input assumptions and changing them has really resonated with the audience, which that's music to my ears, because that is the exact way to use DAYZER, with coming in a somewhat close second with 31% being congestion driving details, which really does go hand in hand with your scenario testing and your outage modeling, because first you understand the drivers, then you build scenarios around those drivers to see how that changes your range of outcomes. So appreciate all those responses. All right, Blake, moving here towards the end, let's talk about some quantifiable outcomes. So from your experience, if you could really boil it down, where does DAYZER create the most tangible value? Is it catching some mispriced opportunities that we've kind of talked about? Um, Increasing your internal justification for your trading strategy, or simply, having that confidence that you have a real simulation that's underlying the decisions that you've made?
Yeah, I think a lot of it is not just the trades it gives you, but it's the trades it keeps you out of. In a sense, they always say you miss 100% of the shots you don't take, and I say thank God on a lot of those, because they're trades you didn't want to be in that you thought you did. And I think it's just the ability to understand the extremes, right? Power is a whole different animal than what you're going to get in any other commodity, right? Not only, we don't have storage, and I know batteries, but this isn't like putting natural gas in a salt cavern and being able to ratchet it out when we need it. You have this, need to balance supply and demand at all times, every 5 minutes at least, maybe even long, maybe even sooner. And so that creates just a lot of, inherent volatility in this commodity that you're not going to get anywhere else. And it's these extremes that are going to end up putting you in a position to get another job because you lost yours. And so understanding what can happen. I mean, obviously, Yuri, I pray is a long in the past outlier, but knowing things that are out there, the Elliots of the world. What happens when we have a bunch of cold air come in from Canada and start working its way from Denver all the way over to Pennsylvania day by day, and it's over Christmas Eve. It's trying to understand where this thing can truly go versus where it's not going to go. For me, I think, obviously the scenario analysis, trying to use it for, longer term projects, like if we're doing siting a battery or buying into a data center or something of that nature. Yeah, understanding that's really good and really important. But for me, it's really, I think the biggest value is trying to understand and have a good feeling on just the width of the range and the extremes and the crazy things that can happen. And you really, I like the fact that I've got a bunch of different levers within DAYZER that I can test out and pull and see just really what could happen. And obviously you want to make sure that you understand the output, that there are certain things that, maybe DAYZER will not be able to solve that constraint. So it's going to make it look worse than it really would be, because in reality, there's other levers that PJM has. So you have to question everything, but you have to run the simulation before you even know what the questions to ask, right? So trust but verify, look at what's going on, and just, sometimes, this is the key to getting out of a bad trade or not putting a bad trade on. So just, running your simulations and knowing what you're doing there. And obviously, you want to put good trades on, but I would say avoiding bad trades is probably just a bigger deal. So.
Yeah, absolutely. Thanks for that, Blake. Yeah, exactly like you said. One of the biggest. So I actually was a DAYZER user, 8 years ago myself. And one of the most rewarding things that I saw in DAYZER is, as I built kind of the institutional knowledge, like you're saying, as I was monitoring the markets, as I was looking more in the short term, right? Like, which is where, a lot of the DAYZER fundamentals are, is in simulating, what is tomorrow, the next day, versus the backcast of what just happened yesterday. As you constantly build that institutional knowledge, which DAYZER really helps with, quickly digging into the drivers, what is driving the results, what maybe needs to be tuned, some great examples you showed in order to drive closer to the market. As you build that knowledge, it naturally positions yourself better into, what do I need to study in the future, right? As I understand the reality of today, what might I need to change for next month? What are really the factors that are driving the value around a given FTR path, a basis position, what you're hedging? Now I understand that I do have this significant volatility to coal, exactly how they're managing their coal pile, the availability of coal. Okay, I've established that's something that I need to study. Now I know I need to create sensitivities around that. Or maybe there's a problematic transmission outage. Maybe it's something as simple as the switching state of a power device, right? If you have exposure to the way that some power active resource on the system is changing the power flow, I need to simulate with that, actively affecting my power flow or not, right? So DAYZER can show you, again, just by building the institutional knowledge, running the model, understanding what is driving the results of the market, and then by that iteratively knowing what sensitivities you want to craft, what you do want to vary for the future, so you make sure that you're painting an accurate range, just as you said, to really give that confidence and that understanding, not only of the trades that you want, but also the trades that you don't want. Exactly like you said. Um, so yeah, this is thank you for changing the slide here. We have a basic kind of volatility graph. This is an example of something that I quickly threw together in one of our user group meetings, where I did what I called the dumbest sensitivities possible. What I meant by that is I didn't use any institutional knowledge. I just simply made wind go up and down, made demand go up and down, just quickly running some sensitivities through DAYZER, and then stacked kind of the volatility of those sensitivities on top of each other versus what happened in the market. And lo and behold, it actually did largely capture the volatility in the market. Again, just kind of a blind sensitivity, a proof of concept of doing the most simplistic version of kind of a lot of the aspects that we've talked over here today. So obviously there's a lot better visualizations that larger teams could come up with, but that's just an example of, again, simple wind, solar, demand adjustments. Even that in a very simplistic vacuum can identify potential volatility risk and the corresponding value that may be present. So just some closing points. I really appreciate all of the insights that Blake gave, and I'll turn it over to him as well for some final words. But hopefully, what we've captured here is that the future, the complexity is always increasing. The further past, maybe a year ago, is not reflective of the future, but the very recent past, with the help of DAYZER, can dig into some exact drivers, helping you understand the market. But there's simply an incredible need for forward-looking models that give you the ability to simulate different futures, both in trading, but even in deciding, acquisition of projects in the further future. What sort of transmission build out? We know several markets have extremely ambitious transmission plans. DAYZER can also model, different build outs of future transmission, as well as all the resources. How much gas can we expect to be able to meet some of this demand? How much is going to exist behind the meter? How price responsive is this load going to be? DAYZER has the ability to model all of that. Again, we provide a persistent base view of what we believe internally as our best guess for the future. But again, we provide the tools, the details, the insight, and the flexibility for our users to study a range of futures, both in the short term for DART trading, the medium term for FTR trading, and then even the longer term, again, for the actual project development, siting, and acquisitions. We really focus on transparency of all of our inputs and our outputs, the transparency of being able to quickly do a lot of different sensitivities and variations, and providing robust defensible strategies for trading. And as I said before, the future's only getting brighter, going a little long, so we have some times for some questions, but we're really just beginning our integration with the rest of PowerGEM, so more to come across both the DAYZER platform, Probe, Terra, Servum, and MCAS. Please schedule follow-ups and demos with Taylor or the rest of our wonderful sales teams. And again, a real special thanks to Blake for joining me today. Anything you want to leave us with, Blake?
No, I appreciate you guys giving me a chance to come out and speak. I guess, as a point of reflection, I look back at what this used to be like. The world was a much simpler world back then, where you really had to just worry about temperature because that was your load, and supply was pretty static because it was solid fuel, coal, and then you had more natural gas plants coming in. And now it's just it's very chaotic, and it's only getting more so. And it's actually, here I am 20 years in, and I'm just as excited about it as I was at the beginning. So I appreciate you guys providing such a great tool, and the time to come speak.
Awesome. Thanks, Blake. All right, we have some Q&A.
Yeah, thank you, everyone. Wow, Blake, Thomas, fantastic conversation. I think we could have gone for another hour if we wanted to. We have a handful of questions. We may not be able to get to all of them. If we don't get to yours, I promise we'll send it in a personalized email to you over after the webinar. Our first question comes from Jose. He wants to know, I think this would probably be better suited for Blake, but feel free to chime in, Thomas. He wants to know kind of what your experience using DAYZER is to predict congestion.
Yeah, it's really for me. It kind of goes back to the points we've been hitting this whole time. Is it's just creating sensitivities and base, around the case. Like you can run just the straight up base case if you want, but it's really just trying to understand where things are and where things can go. And for me, using it to predict congestion kind of around the Dominion stuff and creating new sensitivities and more load or less load or a lesser growing load or a higher growing load and seeing where things kind of lay out. How often are we going to see, that area go? Because we know that putting 50 megawatts in Loudoun County is a very different animal than putting 50 megawatts in southern Indiana. And being able to truly figure out where that sensitivity is to me is a great value. Uh, Also, it's also important to really understand, where, if you start looking over on the MISO side of things, which, we're not super active on the DAYZER side there yet. We're still working to implement that, but you've got, an ORDC that's been built in since October 1st. And when I look at that area, you start seeing, well, it looks like you stapled two different ISOs together between the MISO South and the MISO North, and they have very different supply demand pictures. And so being able to go in there and say, okay, well, what should the NDR spread be? Should it be wider than the market saying it, or is the market overdoing it? And, once again, simulating, figuring out where things are, I think is a super helpful thing to have.
Thank you, Blake. I think this next one, Thomas, is going to be probably up your alley. Jason wants to know how many people, computers, and time it would take to calibrate a setup to run a sufficient number of day-ahead simulations on a daily basis if you're kind of starting from scratch.
Okay. Yeah, that's a good question, and keeping this less than 30 minutes will be will be a challenge because I have a lot of thoughts. So again, it's really about building that knowledge. You said starting from scratch. Are you starting from scratch in your own market knowledge of the market that you're building into? Because again, just starting with DAYZER short term initially, and just looking at that base case, because the base case is going to give you a lot of insights. Again, it's not going to be right 100% of the time, and every market has their own challenges naturally, but it is going to be a great starting point of getting you familiar with the market dynamics, familiar with the congestion dynamics, what's driving congestion, what can I expect, how can I tune. So just starting with a small team, a couple people, a couple powerful computers. But again, DAYZER is incredibly flexible and has the ability to expand. We have some users that are running 50 daily sensitivities, right? And have very large groups, with a lot of post-processing, data analytics, even running the outputs through AI, or through algorithmic processes to support a robust trading strategy. So it's really a wide range, but I mean, and that kind of almost shows the robustness of the platform, is that we do have groups that still to this day are very successful using DAYZER and are just three users with very motivated users with a lot of technical know-how, stand up DAYZER on a few powerful computers and are still capable of running 20 sensitivities a day. But again, if I were to start again myself, it would be me, maybe a couple friends, a couple strong computers, looking at DAYZER short term, and then immediately starting to set up schedules in DZ Node and maybe looking at the next few days at a time. Again, if you're doing FTRs, then you're going to want to do month-long simulations, which is all schedulable and automatable, but it's just about getting started, starting to build that expertise and growing from there, which DAYZER fully supports that approach.
Awesome. Thank you, Thomas. Jason, I know you have one more question. We're going to send you an email after this webinar, answer that question for you. We may have already gotten to it throughout this webinar, but we'll be reaching out. I want to thank everyone that joined us today. Blake, Thomas, you guys were fantastic. If there's anyone on the webinar that wants to learn more about DAYZER, please feel free to reach out to me directly via LinkedIn or shoot us an email at sales@powergem.com. We'll be more than happy to help set up a further discussion or a demo down the road. We want to thank everyone again for taking the time to join us today.
Awesome. Thanks so much. Thanks, everyone.
Great.
Thank you, Blake.
Thanks, everyone.